Dear students, in the previous video I have told you that the annual value is very important. So the gross annual value or annual value is the base for computation of income from house property. So to arrive that value, let us understand certain terminology. The computation of gross annual value. The first step is compare fair rent with municipal valuation. This is the first step. Compare fair rent with municipal valuation. Take the higher value. So what is fair rent? Fair rent is the rent which would fetch for the similar type of building in the same locality. The rent which would fetch for similar type of building in the same locality is said to be fair rent. So let us take an example. The fair rent per annum is, for example, 60,000. Compare that fair rent with the municipal valuation. Municipal valuation is the value fixed by the local authority. So assume that the municipal valuation, for example, 75,000. So fair rent is 60,000, municipal valuation is 75,000. Take the higher value. So here the higher value is 75,000 and rename it as fair rent. First step is compare fair rent with the municipal valuation, take the higher value, rename it as fair rent. Take that fair rent here and compare it with the standard rent. What is standard rent? Standard rent is the rent fixed by the state government. Rent fixed by the state government is said to be standard rent. So for example, here the standard rent is 65,000. Take the lower value. Compare these two and take the lower value. Here it is 65,000. And my dear friends, there is a condition says that the fair rent cannot exceed standard rent. That is the reason we are taking the lower value here. So first step is compare fair rent with municipal valuation, take the higher value. Compare that fair rent with standard rent, take the lower value and rename it as fair rent. Fair rent. Take that fair rent, 65,000. And compare it with the actual rent. Suppose the actual rent is 6,000 for 12 months equals, compare this fair rent with the actual rent. If the actual rent is more, here the actual rent is 72,000, then the fair rent, it is 65,000. Then the actual rent is equal to the annual value. Here 72,000 is the annual value. Hope this is clear. I would repeat, compare fair rent with the municipal valuation, take the higher value. That fair rent with standard rent, take the lower value. That fair rent with actual rent, if actual rent is more, then that actual rent is annual value. If actual rent is less, let us assume that here the actual rent was 60,000, 5,000 each into 12 months. 60,000. Assume that. The actual rent was 60,000. So actual rent is less than fair rent, then actual rent does not include unrealized rent. And if conditions of rule 4 is applicable. So what is rule 4? The tenancy must be bona fide. If the tenant has made default on payment of the rent, steps must be taken by the landlord for recovery of the same. And he must be taken steps to vacate the tenant from the building. If not, he must have filed a case against him. And also, the tenant should not have been occupied with any other building owned by the landlord. Then we can say that the rule 4 is applicable. So these are the conditions. So we will explain that condition once again. So if conditions of rule 4 is applicable, then because of the vacancy, because the building was vacant, the assessee could not, the landlord could not find a tenant, suitable tenant for letting it out, then the actual rent will be the annual value. Then the actual rent is equal to annual value. Here it is not the case because he has let it out for 12 months. Then the fair rent will be the annual value. Fair rent is equal to 65,000. So the 65,000 will be the annual value. If it is because of vacancy, for example, he could let out only for 8 months. For 6,000 into 8 months, 4 months vacant. Then 48 is the rent received because of the vacancy, so that the annual value will be 48,000. That is the lower value, that is the actual rent received. So dear friends, I would repeat once again, if the actual rent is less than fair rent, unrealized rent does not included in the actual rent, and rule 4 is applicable. If it is because of the vacancy, then the actual rent, that is the lower value, is equal to the annual value. If it is because of any other reason, rule 4 cannot be applicable and it is let out for a lower rent, all that scenario, the fair rent, that is the higher value, will be the annual value. Hope it is clear. Now let us discuss rule 4. The point 1 is the tenancy must be bona fide. It should be a reasonable contract between the landlord and the tenant, and the contract must be bona fide one. Second one, the defaulting tenant has vacated the building, or steps must be taken by the landlord for vacating the tenant. Third point says the defaulting tenant is not in the occupation of any other building owned by the landlord. Finally, the assessee has taken reasonable steps and legal proceedings for the recovery of the arrear rent from the tenant, or he must satisfy the assessing officer that even the steps takes, it is going to be useless. If all these conditions are satisfied, then we can apply the actual rent, that is the lower rent would be the gross annual value because of vacancy. Otherwise, the higher value, that is the fair rent, would be considered as the annual value for computation of income from house property. If it is clear, please share it with your friends and other students. Thank you very much for watching my channel. Thank you.